This video is only for educational purposes. It is not financial advice. Always do your own research or consult a financial advisor before investing.
Welcome. Tonight we look deep into the volatile world of global oil markets and the dangerous question that controls them. Will oil keep flowing safely through the Strait of Hormuz? The world wakes up to another shock in the oil market. Brent crude is moving fast. Prices are rising, falling, and rising again. We are watching global trading floors react in real time. Traders, global governments, and financial markets are all focused on one dangerous location in the Middle East. Prices are moving not because one oil well stopped working, but because the market is afraid of what may happen next. It's a story of suspense, fear, and finance. The volatility often begins with a single headline. Suddenly, a flash of hope enters the equation, momentarily calming the fears of traders. One headline says peace talks may happen. Suddenly, traders breathe a little easier. If peace becomes possible, war risk falls. Shipping routes look safer. Oil supply looks more stable. When fear goes down, oil's risk premium also goes down. That means prices can fall quickly, reflecting a perceived stability in global supply. But the market's calm is often short-lived. The delicate balance shifts rapidly when a new headline, fraught with danger, hits the screens. Then, another headline appears: military strikes, rising tension, and uncertainty around Iran. The calm disappears. Traders now ask a different question. What if the conflict spreads? When military risk increases, oil traders start pricing danger. They worry that supply routes may be blocked, delayed, or attacked, instantly driving up the cost of crude. At the center of this suspense story is a narrow waterway that dictates the fate of global oil flow, the Strait of Hormuz. Cinematic maps zoom right into this narrow gate between Iran and Oman. It may look small on the map, but for the oil market, it is one of the most important routes in the world. Every day, oil tankers move through this route, carrying energy that powers cars, factories, airplanes, and entire economies. If this route becomes risky, the whole world pays attention. So why is Brent crude the primary indicator that reacts so violently to these headlines? It comes down to its position in the global energy market. Brent crude is not just a number on a trading screen. It is a global benchmark connected directly to international oil flows and the critical Gulf shipping routes. This is why one political statement, one military action, or one shipping warning can move oil prices within hours, instantly reflecting heightened global risk. The oil market is now caught in a relentless cycle, trapped between two powerful opposing forces, hope and fear. On one side, hope says peace talks may reduce tension and stabilize supply. On the other, fear warns that military action may expand the conflict, blocking essential trade routes. Hope pulls oil prices down towards stability and lower risk premiums. Fear pushes oil prices up, demanding a higher cost to compensate for immediate danger. But this story does not end with traders and futures contracts. When oil prices rise, the effect spreads like dominoes across the entire global economy. Petrol and diesel can become more expensive. Airlines may face higher fuel costs. Transport companies must spend more to ship goods globally. Businesses see pressure on profit margins. And suddenly, inflation fears return, proving that the flow of oil through one narrow strait affects everyone, everywhere. Welcome to Oil Market Shock, why Brent crude is moving so fast. We are diving deep into the recent volatility shaking the global oil market. The price of Brent crude has seen massive swings. This video will explain the core drivers behind this volatility, from geopolitics to global economic fears. We are witnessing a sharp and rapid movement in oil prices. But what causes this extreme volatility in one of the world's most critical commodities? Brent crude is a benchmark, highly sensitive to future supply expectations and geopolitical risk. It often reacts faster than physical supply changes. A major factor driving current market tension is the heightened geopolitical uncertainty, particularly involving the US and Iran. Fear and risk premium are directly priced into oil. Any threat to production or shipping routes causes immediate market panic, pushing prices higher. Markets are currently weighing potential peace talks, which could ease supply concerns, against the persistent risk of military escalation in the region. The Strait of Hormuz is one of the world's most critical oil choke points. Any threat here immediately raises supply risk for a massive portion of global oil flow. The safety of oil tankers passing through the Strait of Hormuz is paramount. Disruptions here can create a bottleneck effect, severely limiting global supply. The immediate consequence is increased uncertainty about future supply. This is why oil prices react to rumors and headlines, anticipating tomorrow's challenges. Now, let's look at why investors are closely monitoring oil volatility and what it means for global markets. For investors, oil volatility creates both risk and opportunity. Energy companies may benefit from higher prices, but many other sectors face pressure. Higher oil prices boost energy sector profits, but airlines, transport firms, and oil importing countries must bear increased costs. Global markets watch oil headlines so closely because oil is deeply connected to nearly every aspect of the global economy. Oil is not just a commodity. It connects to inflation, interest rates, company profits, and, critically, consumer spending power. Understanding oil price movements is key to forecasting broader economic trends, from global GDP growth to regional inflation. Here is the simple takeaway message regarding oil price volatility and the future outlook. Oil prices are moving sharply because markets are not only reacting to today's supply, they are pricing tomorrow's risk. Fear is the new fuel. Until peace talks become clear, military risk reduces, and shipping through the Strait of Hormuz feels safe, oil volatility may remain high. This video is for educational and informational purposes only. It is not financial advice. Always do your own research before making any investment decision. Thank you for watching. Stay informed and follow the geopolitical headlines closely to understand future oil movements.
If you found this video helpful, like, share, and subscribe for more simple finance explanations.